Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at CVNA, or Carvana Company. CVNA is a leading e-commerce platform for buying and selling cars. Here's the barchart.com technical opinion rating for CVNA. The bar chart rating is a 100% buy and ranks in the top 1% of all short-term signal directions. Long-term indicators fully support a continuation of the trend. The market is approaching overbought territory. Be watchful of a trend reversal. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that CVNA is well above the moving average line, so the monthly trend in CVNA is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since the chart started, so the daily trend in CVNA is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. CVNA is below the upper Keltner channel line, so CVNA is inside the buy zone. Since the trend is up, we want to buy a call. CVNA has plenty of option chains to choose from. We're going to use the SEP 20 option chain. Right now, the September 20 options have 34 days to expiration. Here's most of the CVNA option chain for September 20th. CVNA closed at 155.93 on Friday. That means any calls on the list from 100 to 155 are in the money. Let's take a look at the profit potential for purchasing the 155 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 155 call is 1160 to 1195. We try to enter at the midpoint, so we'll use 1175 as the buy price. Our call option calculator shows the profit potential for this call based on CVNA price changes at option expiration from flat to a 12.5% increase in price. We can see that if the CVNA stock price is flat at 115.93 at option expiration, the 155 call will lose 92.1% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look buying the 135 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 135 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the CVNA stock price is up 1%, the 135 call will lose 9.5% of its value. We want that to be break even or better, so the 135 call does not meet our requirements. Let's see if the 110 call will work. The bid-ask spread for the 110 call is 46.40 to 48.40. We try to enter at the midpoint, so we'll use 47.40 as the buy price. The 110 call works. If the CVNA stock price is up 1%, the 110 call will make a 0.2% or $9 profit. That's better than break even, so the 110 call is the one we'll buy. The call option purchase calculator also shows that if the CVNA stock price increases by 2.5%, the 110 call will make a 5.1% or $243 profit. If the CVNA stock price increases by 5%, the 110 call will make a 13.3% or $633 profit. If the CVNA stock price increases by 7.5%, the 110 call will make a 21.6% or $1,022 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the CVNA stock price does not make the expected move up and remains flat at expiration, the 110 call would only lose minus 3.1% or minus $147 compared to the minus 92.1% or minus $1,082 loss for the 155 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the CVNA SEP20 135 strike call and sell to open the CVNA SEP20 145 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 135 call for $24.85 and sell the 145 call for $17.80. $24.85 minus $17.80 equals $7.05. So the entry price or debit cost for the spread is $705. The call option spread analysis calculator picture shows that the spread will make a 41.8% or $295 profit if the CVNA stock price declines by 5%, remains flat, or increases in price when the options expire. Creating the debit spread will allow us to collect a $1,780 cash credit to our brokerage account for the sale of the 145 strike call. As we said on the previous slide, this reduces the cost of entering the spread to $705. Here's a note regarding earnings reports. The next CVNA earnings report is scheduled for October 30th. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the CVNA SEP20 110 strike call for $47.40. We also reviewed a spread. Spread said to buy to open the CVNA SEP20 135 strike call and sell to open the CVNA SEP20 145 strike call at a debit of $705. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.